As of 12:43 p.m. Eastern Time on September 30th, 2025, SoundHound Ai, trading under the ticker SOUN, is priced at $15.60, reflecting a minor intraday dip of about 0.48%. But that simple number hides a far more complex and volatile reality. While many investors are captivated by the explosive 217% year-over-year revenue growth reported in the last quarter, a figure that paints a picture of a company on an unstoppable upward trajectory, they might be overlooking the subtle but critical details in the company's cash flow statements and the true nature of its recent acquisitions. The expectation is that this revenue surge is purely organic, a sign of overwhelming market adoption. The reality is that a significant portion of this growth is influenced by strategic acquisitions, which, while beneficial, also introduce integration risks and add complexity to the financial picture. Understanding this distinction is key to accurately gauging the company's health. The prevailing belief about SoundHound AI is that it's the nimble underdog, successfully challenging the tech giants in the conversational AI space. We see headlines about their technology being adopted by major automotive brands and restaurant chains like Red Lobster, reinforcing the narrative of a disruptive force. This is certainly part of the story, and the company's Polaris Foundation model, which reportedly boasts higher accuracy and lower latency than its larger competitors, is a testament to their technological prowess. Many investors using platforms like Fidelity, Robinhood, or SoFi for their online investing are drawn to this growth story, seeing it as the next big thing in AI, rivaling the attention given to giants like Nvidia stock and Apple stock. The ease of access to the market through a self-investing individual brokerage account has fueled a significant retail interest in the company. However, a deeper look reveals a more nuanced situation. While the revenue growth is undeniably impressive, profitability remains elusive. The company reported a negative earnings per share of $0.19 in the last quarter, missing consensus estimates. This isn't unusual for a high-growth tech company, but it's a critical factor to consider, especially given the stock's lofty valuation, trading at a high multiple of its sales. The market is pricing in years of sustained rapid growth, and any deviation from that path could lead to significant downside. This is where the tension between expectation and reality becomes most apparent. The expectation is a smooth, linear path to market dominance. The reality is a high-stakes balancing act between aggressive expansion, heavy investment in research and development, and the eventual need to demonstrate a clear path to profitability. For those engaged in online investing, it's a classic growth versus value proposition that requires careful consideration. Platforms like Schwab Intelligent Portfolios and Interactive Brokers offer tools to analyze such metrics, but the ultimate decision rests on an investor's risk tolerance. Looking at the recent stock movement, the volatility is palpable. Daily trading volumes are substantial, often exceeding the average, indicating a high level of interest and speculation from both retail and institutional investors. Institutional ownership currently sits at a respectable level, with major players like the Vanguard Group and BlackRock holding significant stakes. This provides a degree of stability and confidence. However, there has also been notable insider selling in the past quarter. While insider sales can occur for various reasons, they can also signal a lack of confidence from those who know the company best. This is a crucial piece of information that might not be immediately apparent to the casual observer, but is vital for a comprehensive analysis. These are the kinds of details that can differentiate a successful self-investing strategy from a speculative gamble. The availability of Fidelity ETFs and Fidelity mutual funds provides diversified options for those wary of single-stock volatility, but the allure of a high-growth name like SoundHound AI remains strong. So what exactly does SoundHound AI do? At its core, the company provides advanced voice and audio recognition technology. Its AI platform allows for natural human-like conversations between people and devices. This technology is being integrated into a range of applications, from in-car assistance to automated customer service and restaurant ordering systems. The acquisition of Sync3, for example, has significantly bolstered its presence in the restaurant industry, and the more recent acquisition of Interactions Corporation is set to expand its enterprise customer base even further. The company's vision extends beyond simple voice commands, aiming for a future where conversational AI is seamlessly integrated into our daily lives. Their recent foray into Vision AI, which combines visual and audio data for a more comprehensive understanding, is a clear indication of their ambitious long-term goals. Now, let's turn to the future outlook. There are several potential catalysts that could propel the stock higher. Continued successful integration of its acquisitions, leading to significant cost synergies and cross-selling opportunities, is one. The announcement of new partnerships with major players in the automotive, tech, or enterprise sectors would also be a significant positive. Furthermore, any indication that the company is making substantial progress towards profitability ahead of schedule would likely be met with enthusiasm from the market. The company has raised its full-year revenue guidance, a strong sign of confidence from management. Let me know in the comments below, what is your long-term price target for SoundHound AI? However, the risks are just as significant. The most prominent is the intense competition from tech behemoths like Google, Amazon, and Apple. These companies have vast resources and established ecosystems, and they are not standing still in the race for AI dominance. SoundHound AI's ability to continue to innovate and differentiate its offerings will be crucial for its survival and success. Another significant risk is the company's current lack of profitability. In a changing macroeconomic environment where investors may become more risk-averse, companies with high valuations and negative earnings can be particularly vulnerable. The reliance on acquisitions for growth also introduces execution risk. Integrating different company cultures, technologies, and customer bases is a complex undertaking, and any missteps could be costly. Those using investment help services or robo-advisors like Schwab Intelligent Portfolios are often cautioned about the inherent risks of investing in such volatile growth stocks. Platforms like the Robinhood app and SoFi Invest make it easy to trade these names, but the underlying due diligence remains as important as ever. The Fidelity mobile app and the Interactive Brokers trading platform offer more advanced tools for those looking to do a deeper analysis. In conclusion, the story of SoundHound AI is a classic tale of high-growth potential pitted against significant risk. The expectation, fueled by impressive top-line growth and exciting technological advancements, is that the company is on the cusp of becoming a major force in the AI landscape. The reality is a more complex picture, characterized by a challenging path to profitability, intense competition, and the inherent risks of an acquisition-led growth strategy. The recent stock performance, with its high volatility and significant trading volume, reflects this underlying tension. For investors, the key is to look beyond the headline numbers and understand the nuances of the company's financial health, competitive positioning, and long-term strategy. The journey for SoundHound AI will be anything but straightforward, and only time will tell if the reality can ultimately live up to the lofty expectations. For those navigating the world of online investing, whether through Fidelity Investments, Robinhood stock trading, or any of the other investing sites, SoundHound AI represents a compelling but cautionary case study in the dynamic and often unpredictable world of technology stocks.